Good evening, everybody. All right, before we take a look at the markets, people have been inquiring more about the J-hook patterns because we're often asked, what are the best patterns? Like we're often asked, what are the best signals? And the answer to that is, we've already kind of identified the best signals and patterns. There isn't one that's better than the other. We've narrowed down the 12 major signals that work extremely well, much better than the other 50 or 60 candlestick signals, and the patterns. And the reason the patterns are so effective is because they have expected results. Otherwise, we wouldn't be looking at them as patterns. And that the patterns are basically the accumulation of investor sentiment that is normal of human nature, or normal reactions of human nature, that provide high probability results. So how do we use that information to our advantage? Well, if we know a J-hook pattern looks like a J-hook, a wave 1, a wave 2 pullback, and a wave 3, we can identify where it becomes even more effective, like on a bobble breakout. A bobble breakout is merely a J-hook pattern that used a resistance level that everybody was watching and then broke through that resistance level that everybody was watching. But more effective for us is we can see that it's supported right here on the T line, which gave us that much more inclination that we're starting to head back up again. So anytime we see kind of that J-hook bobble breakout, we know we have an extremely high probability of, number one, the pattern working, and number two, the fact that everybody is watching to see what it's going to do at the resistance level, and when it goes through creating the pattern, everybody else is jumping in. Becky, can you tell John Phillips to either check his microphone or click on the red X and sound keeps cutting out. Are you on a cell phone type thing? If you're having problems with sound, go up to the red X to the top right corner, click on it, log out, and log right back in and see if you can get a better connection. All right, so this is our expectation coming out of a bobble breakout J-hook pattern. This basically tells us investor sentiment is good. Then they consolidate, and then we can see the hook, knowing that wave 1 and wave 3 are going to be approximately the same level. So whether you're in an uptrend or a downtrend, wave 1, wave 2, wave 3, wave 1, wave 2, look for wave 3 to the downside. And if you can observe the obvious is you got a dumpling top, and look where this doji came up to, right smack dab to the 50, and then closed back below the T line, doing an evening star signal, J-hook pattern setup. What's that tell us? The probabilities based upon the J-hook pattern, bearish J-hook pattern, it's heading down. What's our expectation coming out of a dumpling top? Heading down. So it just gives you double confirmation that they've come up, they've failed, they're heading lower. They've come up, then when we see this, we anticipate they're heading lower. So the J-hook pattern is a constant, not a constant, that's not the right word, a high probability expectation of taking it down, coming up, failing, and going into the next wave. So when we see a chart like this, like on Ford a while back, If this is wave 1 and they start rolling it over, where do you think wave 3 is going to? Probably the next level that everybody else is watching. So I use this today in the YouTube, the gold stocks, AU, wave 1. Now it's in wave 3. Look at your J hook with a bearish engulfing failure, not only at the T line, but the bearish engulfing opened lower the next day, confirming that the 200 was not going to act as support. This becomes a high probability trade. But we were looking at this as, when do you take profits on wave 3? Well, when wave 3 looks like it's the same magnitude as wave 1, now this is where we start putting in all our other elements of candlestick analysis. Where do most people sell? They panic sell at the bottom. That's that gap down doji. So if we see a gap down doji in the oversold area, what's our first target? Or what's our first strategy? Get ready to take profits if you're short. Because again, where do most people sell? They sell when they gap it down in the oversold area. And what's our other inclination that this could be the bottom? Because wave 3 is about the same magnitude as wave 1. So anytime we can see a pattern setting up, downtrend, comes back up, rolls over, what are we looking for? Well, this is where we're going to go kind of segue into our promo for the weekend. There's our ticker signal confirming that they failed at the 50, closed below the T line. What's our assumption? Well, our first target is here, but that's a high probability trade setup. Now we have a doji. What's our doji rule? The price is usually going to move in the direction of how they open after a doji. So that gets us alerted to the fact that if we are short or if we're in puts and it opens positive tomorrow and the market opens positive, that's a good time to start taking profits. So when you can use that information, knowing what your expectations are of a pattern, I trade hogs or cattle or the dollar or wheat during the day. Well, if I know this is rolling over, I know that my probabilities are we're heading for wave 3. Then when I see it rolling over, I know I should be short because wave 1 and wave 2, wave 3 is going to be the same magnitude as wave 1. So if I can assume, like today, that we were in a downtrend, I shorted hogs. And where would I take profits? Look at our buy signals occurring right here in the oversold area. So it's a good time to take profits. But then look what was happening. They failed at the T line. There's an evening star type signal. So I start shorting again, and then I short some more when it breaks that level. Why? Because I can see on the 10-minute chart there's going to be a bearish J-hook pattern on a chart that tells me overall we should be in wave 3 to the downside. Just gives you that much more conviction or that much more confidence that you're getting into a trade at the right time. There are some stocks and sectors that seem to offer more J-hooks opposed to other. No. Candlestick patterns and signals are not any more inclined for a stock as it is for a currency or a commodity. Remember, candlestick analysis is merely the graphic depiction of human nature. It doesn't matter what the trading entity is. So if I see something like this, a bearish engulfing failing right here, I know I can have much more confidence to go short. Now remember our stochastics. We want to see sell signals when your stochastics are in the overbought area. But candlestick patterns, the stochastics may already be in the oversold area, confirming the pattern, whether it's a J hook or a fry pan bottom or a dumpling top. The patterns are usually going to be in the opposite direction. But even if you've got stochastics rolling over at the failure level, you can see wave 1, wave 2, wave 3. So I call this 2 plus 2 analysis. If we can see that they failed at the 50 with an evening star signal, and it closed lower the next, I'm sorry, that's not an evening star signal. That was a bullish candle. But the next day, they gapped it down below the previous day's open and went the opposite direction. What signal is that? Well, that's obviously a bearish kicker signal. And why is it relevant? Because it's pretty much telling you everybody's seeing that it got to the 50. Now they're gapping it down. We're getting ready for wave 3 to the downside. Whoops. There's our failure. Bearish Harami. Sell-off. There's our bearish J-hook. How did it start? Bearish Harami told us the buying had stopped right here at the 50. Get ready for the next move to the downside. Had a hard time getting on board. Don't know what to tell you there, Walter. Do you use the intraday charts to place a position going by the day charts? If so, what is your signal to get in? The same as what the signal would be. First of all, if I was shorting here, I just want to see that it was trading lower. If I'm swing trading, meaning I'm going to go short on this for 2 to 10 trading days, and I'm using the daily chart. If let's go back up here to the intraday chart on hogs. If I'm thinking we're in a downtrend, I'm going to start shorting when I see the selling confirms below the T line. It's not any specific signal. It's what the overall signal is confirming the pattern. You had a question at 6 o'clock. Raymond asked the question again. I'm scrolling up trying to find it. No, Bruce. I usually consider a bull or bear flag kind of a wedge formation. A J-hook pattern is a wave 1, wave 2, wave 3. Raymond, ask your question again because I can't find it. All right, so let's. This is probably not a real clear one, so I'm going to skip it. This is more clear. Why would we be shorting Shopify when it's way down here in the oversold area? Obviously, it's in a strong downtrend. Now, with the gap down below the previous day's open, you want to get ready to short it. Notice what else it did. It did a bearish flutter kicker signal. So if we can see the signal that it did, a bearish flutter kicker signal, we can also identify the pattern that it's creating. So that bearish signal is confirming that the next pattern is in progress. Sonny, yes. Yes, you can see we're down here in the oversold area, but that bearish flutter kicker, bearish J hook pattern says you can still be shorting this because we're probably in wave 3. Now today, when we get to the live charts, it held up a little bit. If you see a kicker signal on the 30-minute but not on the daily, do you move on it? Well, more than likely, Raymond, you're not going to see a kicker signal on a 30-minute chart. Because if it does, remember, there's a gap in that signal. So if you see a 30-minute gap, that's going to be very, very rare because it's intraday. Usually intraday, things aren't gapping around. Oh, on tonight's open of what, the E-minis? Well, that tells you, yes, they've opened definitely in the opposite direction. Carrie, I did cover Shopify, and we'll look at it when we do the live charts. Let's see, that is down about 30% from its high. Even though people are looking for the market bottom, they are wrong. That's right, we'll get into that when we do live charts. You should stay short based upon the candlestick signals and buy signal in the oversold area, even if it drops to 60% out. Rob will go live charts, ask those questions when they're, I'll try to remember it. But you can see what's happening on this chart. You can see the J-hook pattern. What's extra confirmation? The J-hook pattern bounced right up off the 50. There's your J-hook pattern, an evening or morning star signal. So one of the things I was pointing out when this chart was developing is look at your trajectory and look at what happens after your J-hook pattern. Your trajectory goes like this. So if we can see the signals enhancing the view of what a pattern is doing, it just increases the probability. So not only do you have a pattern setting up, but the fact that you had a strong sell kicker signal tells you the kicker signal is telling you there's going to be more downside. If there's going to be more downside, we can pretty much see that's going to be a bearish J-hook pattern. Okay. So that's a good one to lead into Saturday. I know it's going to be a nice day, but we'll try to keep it to less than 2 hours, even though it's advertised to be an hour. Come to the our mini spotlight. We're going to concentrate on the kicker signal and the 3 variations of it: the kicker signal, the bullish flutter kicker, or the flutter kicker signal, and the trend kicker signal. When you start seeing that with explanations, it becomes a lot more clear where you're going to go after the strong trades. Where can we find the patterns PDF? In the products and services area. All right, so that's the kicker signals. Hold on for 1 second. I may have the there it is. Unusual that I can find a link when I need it. So here's the link to the products area. Okay. Remember, this is I was going to say this isn't very expensive, but now for 47 bucks you can get a hamburger Happy Meal at McDonald's. All right, so let's take a gander at what the markets did today. That's why I wanted that one. Okay. So we saw a doji in the Dow in the oversold area. Now, as I think Rob was saying, oh, for sure. I use 1233 stochastics because they work. And it was a very sophisticated process. Sometime about 30, maybe 40 years ago, 35 years ago, when I was learning candlesticks, the common stochastics were 1455. Well, because I was a swing trader, I said I need something a little bit quicker. So it was just a process of sitting in my living room office at the time and going through charts and then applying stochastics. 5.3, 14.33, 12.52. Finally, I came up with 12.33, which seemed to coordinate pretty well when the tops were coordinated with the stochastics and the bottoms were coordinated with the stochastics. You use support and resistance zones that prevent or encourage your entry points along with your candlestick patterns, of course. I don't worry about resistance zones. Now, I use them to see what everybody else is doing. So obviously in some place like this, if this had continued higher, that told us that the 200 was not going to be a resistance. The fact that it closed back through that level told me, they're not going through. What were my candlestick signals telling me? More importantly, telling me the sellers had taken control at a resistance level. So today, we saw the doji. Does that mean the downtrend is over? Well, remember the doji rule. If they open this positive, which will be a very good, or the way we can figure that out is, you can see what's happening to the Dow futures. They're up 100 right now. Does that necessarily mean that's where it's going to open? No, but if we wake up tomorrow and about 5-10 minutes before the market opens, we see that the futures are staying up strong, well, that's going to be a good indication that they're opening positive after a doji. Where's our next likely target? It may only be up here to the T line, but that's pretty much telling us if we've got positions that we're starting to show buy signals down here in the oversold area. Today I covered puts on Shopify because what were my probabilities at that point? A bullish engulfing signal in the oversold area and a doji in the Dow. It might still have a downtrend prospect to it, but the probabilities are starting to go against us. Let's close, take profits, and find another chart that's going to produce something a lot better. Whoops, I didn't scroll fast enough. I use 1233 slow stochastics. Yep. Mark, no. To clarify, candlestick signals are stronger on higher time frames, such as daily. No. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination. Right now I swing trade because I don't have time to sit and watch every single trade all day. I use the 10-minute chart as my bellwether. And if I'm swing trading, meaning I'm putting on stock positions that I'm going to plan to hold based upon a buy or sell signal, I'm going to hold it until I see the opposite sell or buy signal. So there's no one time frame is any stronger than the other. So using a combination of maybe a 10-minute, 5-minute, 1-minute combination to enter a trade, same scenario on the sell side if I'm intraday trading. Yes, Walter, don't really care. And as a matter of fact, my entertainment in the afternoon is listening to some of the talking heads on some of these financial news stations where they're saying, oh, yeah, this market's probably got more downside to such and such a level, and that it's probably going to go to such and such a level. They have no idea where it's going to go. My analysis is, what is the market telling me it's doing? If it's telling me to stay short, I stay short. If it's showing me that there might be a possible reversal, I'm getting ready for a reversal. Francis, that's up to each individual. My option trades are usually, if I'm buying calls or puts, usually 3 weeks out or so, 4 weeks. If I'm doing a spread, it's going to be 2 to 3 weeks. Okay, so today, after the doji in the Dow, we had basically a meeting line here in the NASDAQ. Opened here, closed here. Opened here and closed right about the same level it closed the night before. That makes it relatively simple that if it opens positive tomorrow, this is telling you that's where the bulls are stepping in. Is lesser number of pullback candles a sign of strong trend continuation? Is a lesser number of pullback candles? I don't understand the indications. We usually, if you started seeing lots of tails or downward shadows, that's telling you every time they've knocked it down, they step in or stepping back in. Or if you see a lot of shadows to the upside, I don't see anything here. But if you have something that's showing a lot of upward shadows and then trading lower, that's telling you the bulls are having a hard time continuing that uptrend. Okay, so why, or what can we do to greatly improve our probabilities of being in a correct trade? Well, we recommended BWV. That could be too, Mark. I'm just looking at it more as a meeting line. Look at the fry pan bottom. You can see the rounding bottom. Now there's two elements, or this is why I tell people, if you're learning patterns, learn it very well. You don't have to learn all of them, just be familiar with all of them, but learn maybe 2 or 3 extremely well. If I was doing this all again with all the information I know out there to kind of solidify my mental learning, I would have picked the kicker signal, the best friend signal, the J-hook pattern, and the fry pan bottom, and learned them extremely well. Then, as I learned those, knowing exactly where to get in, where to get out, what it should do, once I know that, and I'm not trying to learn everything, once I learn those 3 or 4 extremely well, now maybe I add another left-right combo or another couple signals or patterns. But we know that on a fry pan bottom, we have one simple rule. And I saw a few people in the chat room today say they got stopped out. And my rhetorical question is, why would you have gotten stopped out? Just because it was trading back a little bit during the day? What is our T-line rule on a fry pan bottom? You see a fry pan bottom trajectory, you can stay long as it doesn't close below the T-line. All right, but why would you be scalping this? This wasn't a big price move. Anyways, I shouldn't say that. Pick what you think is your best trading strategy. I'd be buying this one for two reasons. One, because of what do we expect coming out of a fry pan bottom? A strong price move. Where would it be our first target? Probably right in here, filling that gap. Well, that's still a good 50% upside. And then where's your next target? Probably the level everybody else is watching. So the fact that you have a fry pan bottom, and we know what the results of a fry pan bottom usually is, a very strong price move. Now at least we can visually see where our upside potential is. How do you trade options on stocks such as Peloton? On Tuesday, up 6% on a market open at 10:30, then drops 7% in the next hour, then up 10% over the next 2 hours. No, we should do this later, but I will take a look at that. Remember what we said a few minutes ago about where do most people sell? Look where they gap down in an oversold area. What do you start watching for? Start watching for buying. So Rob, first of all, I probably would have, if I had been in puts, I would have probably covered the puts, but I wouldn't be buying anything. Because what's our criteria for getting into this position? We want to wait for it to close above the T-line. Now, is that a far distance? No, probably tomorrow the T-line will be down here. All right, so we also want to see what signals and patterns are setting up. We recommended Sava because of the dumpling top. What does this tell us? There's a buildup of bearish investor sentiment. So did it execute today? No, not really. But what is this pattern telling us? If there's any weakness in the markets, and this one opens lower tomorrow, you can start shorting it because of that bearish pattern setup. Same scenario. When you see this, where do you think everybody's going to start unloading? Right about in here. And how do we know they were unloading? Look at the signal, a bearish doji sandwich confirming a rounding or dumpling top. So this puts you in positions where these type of moves are much higher probability of being in those type of situations, just based on seeing what type of pattern is setting up. Okay, so when do you start taking profits? We had huge profits in Carvana. This eventually, or not eventually, it peaked out at $375. Yesterday it closed at $30. Today they popped it up. Now, it still didn't close above the T-line, but what do we have going on? We got a bullish engulfing there might be some buying here. This is another situation where I'd rather take profits and go find something else where the probabilities aren't going against you. And I think we did that same thing on the Shopify chart. After a good bearish J-hook pattern with that bearish flutter kicker signal in the oversold area, did a bullish engulfing. Why fight it? You've got a bullish engulfing signal occurring in the oversold area. Took profits and have that money to go on to something else. The biggies still were trading lower, but notice what happened in the video. Wave 1, wave 2, look at your hanging man, bearish confirmation. You could have been shorting right here or right here. Now you have a doji. You've got to be a little bit more attentive as far as what are they going to do on the open tomorrow. Now obviously, if they open this lower tomorrow, what do we got going on? Wave 1, wave 2, a bearish doji sandwich. Telling you wave 3 is still in progress. There's your bearish kicker signal on Netflix. What's that essentially tell you? They don't want to be in this stock after this dumpling top. And what is our expected result after seeing a kicker signal like that? More downside. So if I was short, unfortunately I wasn't, or if I was in puts, seen a little bit of buying today, which tells me if this piercing signal, hate when I do that, opens positive tomorrow, I'm going to close it out, because that's telling me they're probably at least going to bounce up. Can you use a sell stop order? Definitely. You might put a sell stop somewhere lower tomorrow. Now, the first thing I would do in tomorrow's trading is see what the Qs are doing. I don't know how to pull them up after hours, but I'd watch to see what the Dow futures are doing. If we wake up and they're talking about how they're opening the market down again, looks like it's going to open down 140 points. That tells me the downtrend's in progress. Yeah, I'm going to be more apt to start shorting, or I could, if I wasn't short, or if I was already short, I could continue to stay short or be ready to buy. Are your stops mental stops or actual stops with the broker? Also, when would you use mental stocks? I'm usually using mental stocks because I'm sitting here all day long. Now, on something that's not going to fluctuate wildly, if I'm sitting here, I'll just watch it. However, if you've got something that can do wild fluctuations, let me see if I can find where this occurred. There's situations like this. So if I was shorting here, I'd probably have a stop right here. If it was, because if it's sitting down here, it's a nice dark candle. I wouldn't want to see it come back up here. So I put stops in because you don't have time to put a stop in because they can zip it right past you. So if I'm trading futures or commodities, I'm usually putting a stop in somewhere. Should we not buy options before company earnings because the implied volatility makes them more expensive, regardless if the candlestick setup looks good? That's up to each person, Rob. If you want to speculate and be buying or selling or buying calls or puts, it doesn't really matter what the volatility factor is. You're probably on an earnings report, you're buying or puts or calls because you think there's going to be a strong move one way or the other. Okay, so again, we recommend positions that we know the probabilities are, that's not what I want, pretty strong based upon the potential pattern. We recommend positions also, and this is the advantage of a chat room where everybody's kind of looking for the same type of signal. You can see this is an inverted hammer, which the ultimate inverted hammer is your gravestone doji, followed by a gap up, which is your best friend signal, with additional confirmation that they closed above the T-line, and you're about ready to break out through this level. Where do you think your next target is likely to be? Up here at the level that everybody else is watching. Jeremiah, I don't, just because I don't have time. Occasionally, if I think Amazon or Apple is going to have a big price move after earnings, I might be doing way out of the money call spread or put spread. But I usually very rarely go to the trouble of doing a straddle or a strangle. Vincent, no, you don't need to. You're going to come across these patterns. Well, first of all, I find most of my patterns now from people pointing them out in the chat room. But I would have found this one, maybe on this day, it didn't confirm. I would have refound it here. And then, so I would already had this on my watch list. But in this case where I didn't, it was because I think Marshall may have pointed it out. Is the scooping pattern as strong as a fry pan bottom? Yes, but a little bit more rare. No, that's not a real scoop pattern. A scoop pattern is a long, identifiable trend. This just happens to be a short sideways. When would you enter? Well, we put a buy stop recommendation today. I think, what was it, 640? Because we knew if it traded up through 640, it was heading in the right direction. All right, Henry. No, I think, didn't we recommend it today? Yeah, we recommended it today at 640. Yesterday it closed at, whatever that level was, 601. We used 640 because that was a good distance away up that from that selling or that profit taking. Okay, somebody pointed out a few of the electric vehicles. There's a Morningstar signal on the EVGO. Ride. Ride, there's kind of your inverted hammer. Gap up. Good, good chart. This one is probably going to be on the recommended list for tomorrow, even though it's a $2 stock. Look at your bullish flutter kicker signal with a double flutter in here. So if you took out these two indecisive days, you basically have a kicker signal. Stochastics coming up. I would think this one's heading back up at least to test this level. Sonny, you're not going to see a kicker signal on Forex because obviously Forex is a continuating trading entity. So you're not going to see gap ups, but you will see most of the signals that don't have gaps included in them. This was a good example of a bearish J-hook pattern. Wave 1, wave 3 in progress. Boeing was a very good example of a bearish J-hook pattern. At this point, you could start going short or even shorting when it opened lower after that doji, because what was that telling you? This area here was not confirming, and you had a bearish doji sandwich. Oh, I haven't gotten that far yet, but yeah, I probably recommend this. I've got to go back and make sure the volume is. Wampum, another bearish J-hook pattern. And what kind of confirms the bearish J-hook pattern? A wave 1, a wave 2 that came up, and then look what happened right at the T-line, a bearish engulfing signal telling you the likelihood of selling is going to create a J-hook pattern. QuantumScape, wave 1, wave 2, wave 3. Now is wave 1 and wave 3 getting to be about the same? Now you start watching to see if this is the level to start buying. And I think that's about all I got. Warby, wave 1. If I was short, I would have started taking some profits in here. And then re-shorted it right here because you can see the trajectory rolling over. Vincent, who knows? Probably right here. That started your wave 1 downtrend. What? Biggies? No, the biggies are Apple, Amazon. You can see the bearish kicker signal on Amazon starting the next downtrend. Netflix, that gap down, staying in a downtrend. In Nvidia, kind of your bearish J-hook pattern, but now you're down here with a doji type day. I don't know why I was doing that. All right. So I guess that's about all I got. Are there any general questions on candlesticks? My first suggestion is, if you're influenced by what the talking heads tell you or they espouse on TV, turn the sound off. There's only one true indicator that is correct, and that's the market itself. Jim, you would just want to see it substantial. I'm trying to think of scoop patterns in the past. You pretty want to definitely see that there's a flat handle. Rob, that is right. Whoops, I don't know whether I scrolled in the wrong direction. Yes, so as I say, I kind of smirk when I hear all these experts. Oh, one of them was saying, oh, they talk about Apple quite a bit. They're saying, oh, Apple's going to be a good buy at $125. Why would it be a good buy at $125? What? Uh, I guess because that would put their price earnings ratio into a good buying stage. Well, the one thing I've discovered many decades ago was prices do not give a hoot about fundamentals. Prices give a hoot about the perception of fundamentals, and that's what we look for, what the candlestick charts tell us. On the S&P 500, kind of a bearish wave 1. Wave 3 is almost the same magnitude as wave 1 in the oversold area. And it closed almost as a meeting line off 41 cents. How does the overall market direction relate to the direction of commodities such as gold, oil, natural gas? Nothing. Each one of those are based upon its own well, for crying out loud, I've done this 3 times now. Crude oil prices have nothing to do with the direction of the Dow or the markets. The markets have nothing to do with the direction of crude oil. Now, crude oil has more of an effect on stocks that are related in that area. So right now you can see crude oil is pretty flat. A lot of the stocks traded in that area are pretty flat. Meeting line is kind of a bullish signal, depending on how, if they open up positive tomorrow. A meeting line is where they opened it here, closed it here. Then they opened it lower and then closed it right about the same level they closed it the night before. These two lines meeting each other. Best way to incorporate volume with candles setups. You don't have to, or I don't have to. My trading universe are stocks that trade an average of 200,000 shares a day. Now, the only time volume becomes a kind of a confirming or a added fluff factor is if on the day of, the day before, or the day after a reversal signal, you've got a big volume spike. That's a pretty good indication that there's been a major change of ownership. You don't necessarily need volume to confirm it because you're not trading volume, you're trading price. So I don't even pay attention to volume because I've already created my universe where I know the volume is big enough for me to get in and out of each day. Shirley, got to remember how those algorithms are set up. They're set up by human input. What is your oversold area? When stochastics are down below 20, overbought when they're above 80. Oops, we're already at 9 o'clock. Okay. Rick, let's go ahead and do the double line. And in 3.6 seconds, do the next double line. Is there a website that can tell us what stocks are linked to commodities, such as Moss and CF linked to fertilizers? Rob, there's a much easier way to do that. Now, I use Metastock and I use TC2000 as my scanning softwares. So if I think that something like Moss was tied to buy or getting ready to buy, on my TC2000, when I click on Moss and see that it's in, or I can go to hit my sector scan and then see which sectors are acting the strongest. Or if I click on Moss and find that it's in the fertilizer area or food area or whatever, when I click on it, then I can see what all the stocks are in that sector and see which ones have the best chart patterns. Roku, I don't know why. Roku, if I was short, I would have covered the short today. I wouldn't necessarily be going long, but I'd be out of the short position. AIR, you just stay long. You can see the J-hook type patterns in this uptrend. Facebook, stay short. This chart is stay short as long as it stays below the T line. Oops, I forgot Tesla. Tesla, you stay short, but notice it did somewhat of a, well, it didn't do a meeting line. This is called an at-neck, in-neck, something or other, which means if this opens lower tomorrow, you can still be shorting it. That today was just a up day and a downtrend. And Carvana covered the short position just because the probabilities are starting to go against us. EBS, stay short, but if this one opens positive tomorrow after the bullish harami, close out the short position, expect it coming up to test the T-line. BABA, Doji, use the Doji rule. If they open this positive, I'd have a safety stop at today's high if I was short. RVLV, stay short. I thought this one traded lower going into the end of the day. Post, boy, it's consolidating. But again, the Doji rule. What could that be a reversal? Not yet, because you're still above the T-line. Now, if they open this lower and start trading it lower, now instead of holding the T-line, it's probably coming back to test the 50. GDYN, not so much a bearish J-hook as bearish J-hook would be a downtrend, an up move, and a downtrend. This is a bearish left-right combo with weakness. I wouldn't be long this one right now. You could short it if you think it's going to go back to the 50. Again, that would be a function of seeing what the overall market is doing tomorrow. This one does not come up here. I don't know why. It won't come up on this chart. Do you use stop limit orders? Not a stop limit order. I'll usually use a stop. Usually if I'm trading options, I'm sitting right here, I just go in and try to get the best price somewhere in between the bid and the ask. Do you use different limit orders when trading options? No. Well, yes, I do. If I pull up an option and they're bidding $2 and asking $2.40, I'll put my bid in at 220 and let it sit there for about 10 minutes at most. If they haven't executed it in 10 minutes, it means either the volume's low, usually means the volume's low. Now, if I really want it, maybe I'll move my bid up to 225 and let it sit there for another 5 minutes. If they don't hit me, then if it's that hard to get in, it's going to be that hard to get out, so I move on to something else. AFRM, another one that's been in a downtrend and did a bullish harami. So here is a safety stop. If you were short, and you're in the oversold area, you put your safety stop at the previous day's open. Because simple logic says if they start bringing it back up through that level in the oversold area, that means the bulls are starting to step in. CPSS, you could go short on this one. It wouldn't be a great short. I definitely would not be long, though. Lockheed, kind of a bearish J-hook pattern. I'd be ready to short this one on weakness. A blue ice failure. Where is the 200? It could be a blue ice failure. Roblox. This one you would have closed out today. Wouldn't be going long just yet, but you did have an inverted hammer, bullish confirmation. You could be a lot more confident about buying this one on positive trading because of that inverted hammer. And Tesla, right now you just stay short. Microsoft, just stay short. NSC, getting a little bit dicey down here. You're getting dojis, so use your doji rule. If they open this lower, you can stay short. If they open up positive, I would start closing out short positions. Edit, another one that saw some buying, a piercing signal. If this opens positive, figure they're going to at least bounce up to the T-line. Fisker, bullish engulfing signal. Again, some of the electric vehicle stocks started showing a little bit of strength today. Nikola, a piercing signal. So you can start watching those. Alcoa. Alcoa right now you stay short. However, you've got 3 dojis down here. I'd have a safety stop if I was short at today's high. And Huddy, I guess all you can do on this one is stay long. Well, that's kind of a junky chart, but as long as you're above it. So if I was long, it would have to open positive and trade positive. If it opened lower tomorrow, you're kind of stuck sideways. I'd close it out and find something better. AMGN, that's still in an uptrend ever since your left-right combo, kind of your little J-hook type pattern supporting off the T-line. First target is right here, filling that gap. So at least that puts you in the right direction. Melly, if this opens positive tomorrow, you cover your short position. Myrna, this one's not a real exciting trend right now. I guess it is. Piercing signal, another one. If the market's open positive tomorrow, right now the Dow futures are up 134. You want to start covering your short positions. AUPH, nothing. That's an ugly chart. Would not be long or short. Winnebago, you can stay short on this one if it opens lower tomorrow. If it opens positive, close it out, and then I'd be out of it because there's no direction to that one. A blue ice failure, yes, but you'd have to have a bearish confirmation. Yes, you could short it on weakness. AMAT, bullish engulfing, another one you would close out a short position on positive trading. UUP of $1, just stay long. Use today's open as your stop because they gapped it up in the overbought area. ABBV, nothing wildly exciting on this one. If you're long, you can stay long, but don't let it close back below the line. And LABD, yeah, you got a dark cloud. If it opens lower, close it out. Labu, nothing there yet. IMTE, another fry pan bottom looker. You could be buying this one on positive trading tomorrow. Bank of America, stay short. MMI, if it opens positive and you're short, cover your short positions. If a lot of these open positive, it's a good indication that there's buyers coming back into the market. It might be temporary, but you can always re-short if they come up to the T-line and then start fading off again. This one you could buy on strength. Just don't let it close back below the T-line. Natural gas, stay long. Jeff, this is CQG. I don't recommend this because it's about $1,400 a month. The only reason I have it is because it's very fast, very clear. But you get just as good charts on Metastock, which is also very good for scanning as well as providing charts. And they provide charts for everything. All markets around the world, currencies, commodities, are all on one. Now, TC2000 is good, but it's just American stocks. See, we did LabD. Oh, AFRM is up big. Let's take a gander. All right, it's up here. Must have been earnings. We did Roku, didn't we? Roku, you want to close this one out if you're short, if it opens positive tomorrow. Apple, I'm risk adverse and take my 30% profit on option trades rather than maybe make 200% by pulling until a sell signal in the overbought area and it closed below the T line. How do I gain the trust to hold longer and get more profits. Simple. What's the T-line rule? You stay long until you see a sell signal. I'm sorry. You stay short until you see a buy signal and a close back up above the T-line, with the caveat, the further away you move from the T-line, the higher the probability it's going to come back up and test it. Riot, bullish engulfing, another one that might bounce a little bit. So when all these positions have potential reversal signals, you got to see how they open it the next day. BABA, now if you were short BABA, your doji rule, if it opens positive tomorrow, definitely use today's high as your stop. So some of you folks that are fairly new to this, there's some very simple stop loss procedures using candlestick analysis. I always use the illustration that every money manager has sage advice. Cut your losses short, let your profits run. But they never tell you how to cut your losses short and let your profits run. Candlesticks do that very effectively for you. Okay, so Hood was up. Oh, somebody bought 7.5% of the stock. And Zen, Doji, long-legged Doji, if I was short, I'd have a safety stop at today's high. Okay, one last one here. DraftKings, same analysis. If it opens positive tomorrow, close out the short position. Remember, when you start to see buy signals in the oversold area, that means the downtrend has more prospects of going the other way. I started learning way back, I think in the 80s, maybe late 80s, early 90s. It took a while because I was the worst investor in the world. I was even a stockbroker for 8 years. But I would do everything that the normal bad investor would do, trading off emotions. Well, it took me a while to realize that it wasn't what everybody was saying or what all the projections were. It was actually seeing what was going on in the stocks or the prices themselves. So I would say after 2 or 3 months, again, I was by myself with nobody to confer with to what made the signals and patterns work. I just kept working through, and then finally I got to the point where I realized that this is what cuts your emotions out of your trading. What do most people do when they have a profit? They want to book that profit because, boy, would I look stupid if I had a profit and I let it turn into a loss. So I'm going to take a profit just because it was time to take a profit. And so I've learned, as long as there's not a buy signal and a close above the T line, you stay short. Steve Nissan had, after a few years of learning candlesticks, he came out with a couple books. I said, oh boy, I'm going to learn some more. Unfortunately, when I read his books, I knew less when I read them than when I started. And then I discovered that he didn't trade. So, anyways. Oh, that was it? Okay, thank you, Jay. So I wrote my first book, I think in 2001, but I never met him. He just didn't like me very much. Okay. Yeah, so I when I first started the website back in 2001, I probably had at least 2 dozen people say, "What can you help me with Steve Nissan's material?" And I had one lady say, "Can I send you his information and tell me what you think?" I hate to say this, but couldn't get through the first 10 pages. It was so boring. So the reason I wrote my books was based upon experience of knowing what to expect and how do you control your emotions when you put those trades on. Rob, yes. If I can see that it's going to close as a sell signal and below the T line, yeah, I close it out. I'm trying to think of. Let's say I was long this one and it was trading down here with 15 minutes left to go. I can see that's going to be a bearish engulfing signal right at that level. Close it out. Okay. I guess with that, everybody have a good evening. We will see you bright and early tomorrow morning in the chat rooms. We'll see you then.